Hello, everybody, and welcome to the Plus Three Futures and Commodities Show. We are recording on 7/7/7. How about that, Barry? July 7th,
Good.
2023, which is add them up, that's 7/2.
Yeah, it was a good trading day, so maybe it's a sign of things.
We'll see. We'll see. So on today's show, Barry's going to cover, as he always does, what we call the Big Five, which is ES, bonds, gold, crude, copper, the dollar, and the euro. And I am going to cover the following commodities today that I think are interesting. We're going to look at wheat, soybeans, sugar, cotton, crude, and nat gas. But before we get into those, we always take a look at what's going on in the crypto world, and Bitcoin is the king of crypto world. So let's see. And as we were talking about before the show, Barry, as long as we're above this full square, you can't say it's bearish.
No, it's not bearish.
It's sort of flagging here after that move up, and it's kind of been what it's done. You know, we had a move up, flag, move up, flag. The only thing I'd say to be cautious of is if you look left, we're right in this mess here, same price area in this mess that we were on the way down in May, June. So we may have to spend a little time here chewing through the supply.
Right.
But as long as we're above this full square, which, by the way, all these levels are posted to a Google Doc spreadsheet, which I'll tweet out the link to when we tweet out the video. Right now, the full square support is around 28,850. And so as long as we're above that, we're bullish. Resistance is going to be in this half square area here, which is around 33,350. So not much going on because we've been going sideways for about a month, but it's not bearish. No. What else do you have to add here on Bitcoin?
Bitcoin, well, it's exactly like you said. This 29,800 or so is my I have a quarter of a square there. It's a support level. So long as we're above that, we're in good shape. And I, like you say, the likeliest move should be to the upside. Now, if we take out that low, then I think we could have a different story. But that key level is the key level I'm watching very closely.
Sure.
Like 29,800. Yeah, right in there.
As with any market, you got to, when it's going sideways, you got to let it play out as it's going to. And then when you get the move and you have an edge to play against, then you play. Let's jump in. I know we got a lot to cover. Let's make sure we get to it.
All right.
Well, your upper limit there really covered it. 44.75. Yep.
Yeah, rock solid, baby. 2 tries and still standing. I should say 2 weeks of worth of work, right? And still standing. So we left off last week. We were watching 44.75, and that was the key level to take out if we wanted to go higher. Otherwise, we're probably gonna, looking for some kind of a correction. Basically, we spent most of the time between those levels. We spent the majority of the week really sort of grinding against its 44.75 area, trying to get above that. And today, Friday, the same thing. We went up to a little bit higher than 44.75, trying to get above. Couldn't do it. And we're going to end up with an inside day, most likely. So we'll see how that finishes up. We're recording a little bit early, a couple hours before the market close. So that's why I got to have to wait and see a little bit. Going into next week, a couple of things you guys have to keep in mind, or you had to keep in mind, was that we had a bunch of cycles expiring right here, right in the middle, between these 2 peaks, let's say. So right around, latter part of June. And they were staggered. It wasn't like it was just one cycle exactly on some spot, but majority it was right there. So 44.75 was sort of the key level that we, pushed up against or worked with all week. Couldn't quite do it. And is it completely negative? It's not completely negative, but it's losing some of that momentum that we had going up into that. Remember, that first this 180-day move going up into it, then we kind of started losing momentum. I'm sure if you guys have momentum-driven indicators, I'm sure MACD, most of those should have given some kind of a negative signal. As we made a new high, the indicators might not have done so. So that's a possibility. Going into next week, we can't leave 44.75 alone. So I would say we have to watch that. And I would say it's a little bit bullish because we did have that date that we marked up in this little box right there. And, that was around July 13th through 17th is when that box, if we go up into that, that would set up a 45-day run.
Mm-hmm.
And that's how we got that. Let me just show you guys where that came from. It was a 90 run.
Mm-hmm.
And that would get us up into this 45.66 area. Let me just drop a line there. So we have that.
What's your actual date on that 90?
It's July 17th.
It's funny because, which I'll show when we go over the NQs, 144 trading days from the January low is around 719.
719.
Mm-hmm. Same area, right in there, 717, 719.
So anyway, we're watching for this 90. That's why that box is there to remind us. And that's an important point. And the reason I wanted to bring that up, is to continue the story, look at the structure a little bit. What's important to remember is yesterday's push down, we kind of held above all these bars that we put in the previous week. So to me, this is bullish. This is a bullish formation as of now. And if we manage to push above, like let's say, Monday, push above 44.75 and kind of be able to get on top of that versus the opposite, which is we're grinding from below, trying to get through, then I would say we're easily going to go check out this 45.5, 45, 60, 70 level. And if we're going to get that close, maybe even go and do the full square, do 135 up here around 46.60.
Mm-hmm.
I would rather reach. But anyway, at least for next week, we're looking at this 45.66 level. If the 45.75 is taken out to the upside. So that's still pretty good. It's almost 100 points, right?
Yeah, it's going to be a nice move.
It's to be a good move. On the other hand, if we can't get above 44.75, then, we start taking out this week's low. I would say that's a bad sign, and we're probably going to start slipping and sliding towards the end of the month. So no hedging there. So
on the daily, I've got a full square at like 44.44. So right in there, it's got to hold a little lower than that. Yeah.
44.44.
44. No, higher. 44.
44. Sorry.
Right about there.
Right
yeah.
there. Okay.
Which is
so
near
to hold above that. Okay.
Near those lows that you were talking about.
It's right there.
Mm-hmm.
Well, fair enough. Yeah. So that's kind of, trying to keep it simple because you have a lot of moving parts here. And the run is getting a little bit extended. We're not used to this kind of a run. It's been a while. And we're running, I posted that chart. We looked at it the other day. We were running these 30s and 60s and 90s. And we were running into a 270 here from this low, where we did 270 from the initial low right here, coming into here, in between the two highs. So we have some things here, and we could do a grand finish and run up into 45.66 area. So the point of talking about all of this is just keep an eye on 44.75 for next week. If we somehow get above it, expect it to continue. And if we can't, we could consolidate, or we can run back down into 43.70 area and check that out. How's that?
That's a good summary.
Let's look at the weekly. I moved the square a little bit, and I wanted to point out was that, we did 36 weeks from this low. In itself, just by itself, it's not a big deal, but we did have some of these other squares come in. So I think it's something we should pay attention to. And we talked about it a couple of weeks ago. I pointed out the square, the fact that we had it in place. So let's keep an eye on that. So quarter square comes in right up in here. I'll show you guys that.
I mean, everything you're enumerating, Barrie, is basically just pointing to the fact that we're slowing down, and it's the momentum is sort of waning. It doesn't mean it's not going to push higher. It's just struggling. Like after that, sort of straight up move we saw for a month, it's starting to struggle.
Yeah, it's starting to struggle for sure. So you guys can see how, coming up from here, the quarter square is that line that I just drew in, and we're pushing up right up against that. So it is a level. And this is 7/8 from this square, this gray line right there, which matches the quarter square coming from the high. So that's a really important level, and that's around basis weekly. I'd say, let's say 45.25, something like that. Let's just put it up in that ballpark. Of course, it could spike a little above, a little below, but the point is that we're coming up into one of those levels, and we have a time count going into that. So that's important, and we need to watch that. And if you guys want to follow us during the week or every day, we both post on Twitter, all the markets. Ben covers all the markets, and I just post mostly on the S&P and 30-minute updates. So you guys can catch it there. And that's where we can really look at the nuanced points. This is just a daily. So it's we do what we can with the daily. We'll see how it goes. But that's all we have to remember for the S&P for next week. Bonds, well, bonds were easy this week. We broke this line. If you guys have been following, you can go back and look at some of the previous videos coming up into this area. We had this equilibrium line. We were looking for it, when it breaks, we were looking for either one to break. When it breaks, we were looking for it to continue. And we were looking for a break to the downside because we're negative on bonds. And what I had said was that we'll probably go back and check this low back in February. And looks like we did.
There you are. Yep.
There you are. And if we can, and that's, that's a low, that the thing there is, we have a almost 90 low, right? Right there. You can see 90, 180. So that could be a low for now. You know what I mean? Before we go any further.
Right.
So let's keep an eye on that next week. I'll be definitely watching that to see if we're going to get a false break here, which would really be proper if we were going to do that. Otherwise, I'll be a little bit suspect.
Right.
If we can do a false break here and start at least have a reversal bar, then I would say we're probably going to go back up and probably test this area, maybe kiss this consolidation area from below, maybe the half square before we turn back down again. Or even the lower boundary of this consolidation area, but about 126. But for now, we're definitely bearish on this, and we have been. The only thing to watch for is we have this low 90 to 90 low, which is also low to low to low. If you just move it a little bit, it happens, and when it happens, we ought to be on top of it. So these two lows came in pretty much in a 90. Let's say we take the middle there. So 90, 90, 90, low to low to low. And that could put in a pretty decent low, right? Now, the flip side of that is when you have a 90-90 like that and the low doesn't hold, well, then we're going to do this, go back and check the October lows like we've been expecting.
That's right.
So that's a caveat. So keep an eye on that.
There's also weekly resistance and monthly resistance that's now above for me on my full squares, like around 125 and a quarter and 126 and a half, right in the area where you were saying you could see a retest. Okay. Yeah.
Yep. Makes sense.
So if we went back and kissed that and failed, that would be a pretty pretty bearish scenario.
You want to take those because those are the fast moves.
That's exactly right.
And here's the weekly bonds. We had this ABCD drawn up to say, well, at least we might come up and make this, and that's around 120. We broke that trend line that we had in. That was our trigger last week, if you guys remember. We took that out. Not to say the expanding triangle is not still in effect.
Overall, it's weak. Bonds are weak.
Yeah, bonds are weak. But we did get to that support level, this
right.
double bottom here. And it is quarter square.
Sure.
It's possible we get a little bit of like you said, a little bit of a bounce before we go much lower. So we'll just keep an eye on that. Move on to crude. Let's start with the daily. How about that? So here,
it's marching out.
It's marching. After we went down, if you guys look at this box that was drawn in a while back, and we went down to the bottom of the range we've been in, and slowly started to crawl up higher. Now it's 73.50. And I think a couple of weeks ago, I said, when this low came in, a lot of the oil-related energy stocks were making lows, and some of them really took off. Some are moving higher a little bit slower, but crude just kept it up. And what else happened was, we broke out of that triangle.
The triangle, yep.
So this is, I would say it's important. It's an important break. We held the lower boundary. Now we have this channel that's coming down, but that's just, we'll see if we've got any power left in it. So next week, if we tap around 76, that would probably halt it for now.
Mm-hmm.
We'll see how that works out. And I see that I deleted the square last week. I didn't put it back on. Let me do that really quick.
Yeah, it looks like it's finally waking up.
Yeah, after a bit of a hibernation, right?
Mm-hmm.
So you can see we did 135 degrees down perfectly from the high. And I think the movement along the square kind of tells the whole story if you were to just pay a little bit of attention to it. Because what happened was we came down to 135 right there, found support along that line, and we were stuck basically, all that 73.50 really is from that middle of that square, right? So you can see we spent a whole bunch of time above it, kind of did a little double wipe and came back down. Then we spent a whole bunch of time under it. So you can pretty much be assured, if we can settle above 73.50 again, testing 83 wouldn't, another $10 run wouldn't be out of the question. That's how
I'm gonna go over a couple things on crude too, but it's very similar picture. It's
okay.
It's kind of waking up from its slumber. It's time to focus in on the bullish aspects of it.
Yeah, it's starting to. So basically, for next week, watch 73.50, and keep an eye on this 76 area, 73.50. Once we get on top of that, it should be dialed in. It could move, and it's probably worthwhile trading it. So 73.50 means we're going to have to sort of close above this, and ideally we're above the half square on the weekly, and that's definitely a strong point. And it doesn't mean as soon as we break it, we're going to take off. And we might even spend a couple of weeks in here checking back, just like we did back here when we broke out of this quarter square. We kind of broke out, came back a couple of weeks, sat around, then moved. So it's very possible that we consolidate up there, but the wait might be over unless we tap that and just sell off again one more time. So
that's possible, right?
And the other thing we're touching is this trend line coming down. So today we're just touching it and really pushing against it. And just so happens the 50% of the square just happens to be right there. So it's a really critical point, critical time. We'll just follow through and see how it pans out. But that's the number to watch so you guys know what to do next week.
We've had that number for months.
Yeah. Speaking of for months, well, here's 1940 been here for years.
Yeah.
At least a year, a couple of years. And it's still working. So here we are, we're under it, kind of like the S&P pushing up against, the 44.75. Yeah, that area. We have 1940 sitting here. So gold is still pushing. We have a trend line coming up here. We didn't quite get to the 1887 level. So I'm not sure if gold is actually done. It could just be consolidating on the way down. I don't have enough. We don't have a higher high in here, so I can't really call it out. I would say right now it's still in consolidation, and long as we're below 1940, it's more negative than positive.
Yeah, the only thing positive is you got that higher low. Let's see if we can build off that.
That's there. Yep. But I would have liked to see this low come in maybe a little closer to 1887, or at least on a couple of time cycles, which we got close to. We did 45 days.
Yeah, it just doesn't look done yet with this corrective phase. So, I agree with you.
We did, almost 45 days down. So, it's possible. It's gold, so wacky sometimes, but we noticed it, right? So what we're saying is, okay, fine. Even if that square came in, let it get above 1940, and then we can start trading it, right?
Right.
So
and that would give you the higher high too, if we got above there.
Exactly. So it did come down 45. So let's work with it from there. And moving on to the weekly gold. So weekly gold, while the daily didn't quite get to it, which would have been a little bit lower in this zone that I marked out in green. And here's 1881. We did come into the zone. Okay, fine. That it did what it had to do. We had an inside week, so that's a little suspicious. I would say basis weekly, if we can really settle above 1919, I think we have another run ready to go. I'd like to have price confirmation first, so we'll wait for that.
Agreed.
It's in the horizon.
Promising. It's looking promising, but not quite there yet.
Not quite there yet. Moving on to, speaking of promising things that are not quite there.
Definitely copper.
What it did do was hold the trend line that we put in last week, right?
Yep. And we got a higher low.
Yeah, it came down Thursday, kind of held it.
Mhm.
Friday, they went back to double check it. Fine, all right. So it's okay. I'm not all that excited till we can get above this 380, 83
Right.
area. If we can get above that, I think there's a nice stress-free run left in it. And the weekly is not that much different, really, if you look at it. We have an inside week, and it's kind of middle of nowhere, right? It's between these 2 points. In the weekly, in the bigger picture, this low came in. So this is the point, you guys. The thing is, are we going to look at this little leg and call it bearish? Are we going to look at this little leg and call it bullish? We're going to call this and call it bearish. You know what I mean? You don't want to get wrapped up too deep in this. If you look at the overall, the reason for doing the weekly is to look at the overall sort of the pattern. Now we had a low, came up into a high. We had another low here, and we really didn't have a confirming high following that low. So that's why, if you guys are wondering, oh, why are these guys bullish on this? Well, it's bullish because we really didn't have the upside cycle expire yet. So we have to follow it till it does.
Mhm.
And in the meantime, look at that ABC. Goes right back up to the square.
That would be a
beautiful or
nice
what?
setup. Yeah. Real nice setup.
So I'll leave it on there, and
Mhm.
let's let it finish up what it's doing here, and start moving. And we'll know when it's time, because it'll be crossing the 50% of the square. That would be our marker.
That's right.
Moving on to the dollar, corrected a little too happy on the corrections here,
Mhm.
but it could also be some kind of a flush. So we'll see. But the general pattern basically is, we haven't really gone anywhere for a while. So we have a lower trend line here. We'll see how that works out. I can even draw an upper trend line now.
And you got a triangle.
And we have another triangle. The thing is, the dollar can do whatever it wants to do, as long as it's above this 50% square, 101 and little bit of change, and it's holding above this box. It's basically in a good spot. You can't really say a whole lot negative about it. Why? Well, because these lows came in. And long as we're making higher lows, higher than these lows, you have to call that what it is. We'll see how that plays out. And if you look at the overall thing, yeah, we had a nice sell-off following that big, bull run we had. And ever since, the early, January low came in and February high, we're between that. We're between these 2 points, right?
Right.
So not much to really do. It's not in a big bull market per se. Now, some people might say this is, in the long run, this might be negative, but because of the support and how the cycles expired down here, we're not so convinced. At least I'm not. So we'll see how that works out.
Sure.
Yeah, currency do some strange things, but just wait and see. Here's the weekly dollar again. We drew out this little triangle last week, at the time before that, and you can see, we've been holding 5, 6 weekly lows along that line, and this week is no different. So it would really be next week. We'll see if we can take this out somehow or not. And if we hold it, I think that would be positive. Like, we said there is a triangle forming. So by the time we get to the end of that, yeah, we could do this for another month. But at some point, one side or the other is going to give out, just like the bonds did. And basis weekly, in the bigger picture, as long as we're above the 90, it's very bullish. So, what are you going to do? Yeah, I mean, this is what people
let the triangle break.
Yeah, let the triangle break and just feel relaxed about it. Plenty of other things to trade. So, and here's the euro, back in the euro, and we had it's pretty much the same case, right? We had that box on the dollar. Now we have a box on top. So what do? We ran right up into that. This is good. This is fine. Let it finish up. Looks like a kind of a dirty top until we can really settle above this 144 level, which ends up being about 109 and some change. It's not in a strong position, but if we can get lows sitting above that 144 square, then we can start talking about something. And here we did that, but it also came at the same time as the square 144. So it didn't really kind of count, And, sometimes Gann talks about putting the square at the first higher low. And if you did that, you can see how that high squared out.
Perfectly.
Yeah.
Mm-hmm.
And it's funny, the Euro segment is the one that hardly anybody watches, and I talk about this, give out all these gems when only like nobody's hardly watching, right?
Right.
But you can see how these little things to remember to know that. Like if you knew that, you go, you know what? Let me put on the high or low, and then you can see why that's squared out. Anyway, the reason it's because of that squared out that we've been, that was sort of the target we were looking for. We went up into that, and here's the first sell-off. And I would say this
First pullback.
First pullback, and currencies are not always clean. So let's see how it finishes up. But the reason I wanted to explain the 144 is, as long as we're below that level, it's okay. That's where the top of the box is. And for time counts, I move it back here. You can use either one. What's interesting is when I move it to the bottom, the bottom of that becomes the bottom of the box, right?
Mm-hmm.
So that box traps from either date, so you can't be off by much. You see,
Right.
guys, the chart looks boring, but we think about it before we put it on there.
Yep.
So for next week, long as we can, we're below that, I would say it's a little weaker. Above that, I would pay attention to it. But up until really we leave this square, leave this 110 area, I'm not going to get all bullied up about this at all. Just so you guys know. Look at the weekly. So weekly, remember we drew this line out last week, and we talked about, until that gets taken out, this is really kind of in a weak position. And we have another triangle. We had that triangle fest last couple of weeks.
Right.
We drew all these triangles out. So we're still inside the triangle. Not only that, the triangle and the horizontal line intersects right in here this week, and probably going into next week. So we'll watch that. Not ready to buy this right now.
Right.
Because we got this, 110, this big blue line up here. That's major resistance. So up until that shifts one way or the other. But isn't it funny, Ben, all these months, that line just held it, right? We came up here, sold off, went higher, sold off, coming back again, second time around, third time around. Let's see what happens.
And it's on your half square, so it tells you got the right vibration.
Exactly. It's on the half square. So what else do we have to go back to?
I think that's it.
That's it. I started the Hang Seng. If you guys are interested, I can cover it. I kind of watch it just to see what the price action is. And also, since we have so much demand for natural gas, I was thinking about adding that, but we'll see. It's just kind of watching it on this chart for now.
It's good coverage, and it shows that there's a lot of indecision out there yet.
I mean, overall, right?
In the many different markets, there's indecision.
Yeah, I noticed that. And you were saying the same thing about some of the commodities.
Absolutely.
So we'll get on with it. All right. I'll see you on
Excellent. Yep.
Thanks.
Thank you.
Well, Ben, what's interesting is we're reaching up. We had some resistance like that 44.75 in the S&P.
Mm-hmm.
And I'm noticing we're reaching right up into that your full square.
Yeah. The full square is like 15,570. So that's right here. And the other thing to note is, in addition to what Barrie said, we're stalling as we get near there. I mean, we're within. You can see there's the 8th line. We're within that at the high.
Right.
And remember, we talked about how when we see these steepening trend lines, that's a sign of increased momentum. Well, when you start breaking them and back kissing them like we did this week, it's a sign of waning momentum. So there's no question we're losing momentum. The question is, is this going to be some sort of ABC or sideways structure, or was this a more significant high and we get a bigger move down? The good news is we don't have to predict. We can just watch the levels and see. If we stay above the half square, which is around 14,950, if we stay above that, then you were looking at more of a correction in time with, sort of chop here. If we break through that and then come down and can't hold the full square here, then it's a different kettle of fish. And I think we're looking at, more of a major correction and a major high here. So we just have to wait and see how price acts and see what levels do and trend lines do. And then based on that, we can know that the weight of the evidence is shifting one way or another. Right. We do know that, and this is more of a sort of fundamental and macro thing. We do know that, the NASDAQ is full of tech stocks, which are long duration assets. And if bonds are under pressure, which they are, Not good for NASDAQ stocks. It's not good for the tech stocks and the growth stocks. So, that you can throw that into your toolkit as well. If bonds can find some support here, Barrie reviewed bonds and said it's one of two things happening. We're either finding some support here and going to bounce, or we're going to break right through and the selling's going to continue. So that will have a spillover effect to the tech stocks as well. So, and you could see the weakness in bonds. This thing hasn't even made a new high like the S&P. Anything else you have to add on this one, Barrie? You want to highlight?
Well, no, I think you covered it. We looked at the timing side of it. You looked at the levels. We're good.
Okay.
Yeah.
Yeah, and remember the timing we talked about are from these January lows here, these sort of twin lows. 144 takes us to 719, which is right about there from the first low. And if we go to the second low, it takes us to 727, which is right at the half square timing. So we could push up, make another high in that time frame, because that would give us 144 from these two lows here. So it's, again, something to watch and a marker to look at. Well, let's talk about the commodities. So as we were talking in the end of Barry's segment about the indecision that we're seeing in a lot of markets, we're seeing the same thing in the commodities. This week, we're going to cover some that are showing some promise with higher lows, after putting in an important low. That's going to be wheat and soybeans. Sugar put in a nice low on a pullback that was structurally beautiful that I want to show to people so we can see sugar maybe taking the next leg up as well. Cotton, the sideways continues, but this is one really important to look at, and I want to show you the weekly and monthly triangles there in cotton that when they break will be good. And we'll hit on crude, just adding a few things to what Barrie said. And of course, nat gas, which we've been bullish on since the low came in. So let's start with the grains that we're going to cover. The first one being wheat. And what's promising about wheat is we had this low come in on a full square, which we triangulated, had a nice push up, sharp pullback. But look where we're finding support, right at this important half square, which also is a good sign of structure, because we had a couple highs here, highs over here, and we're sort of holding in this level. We closed practically, as it always does, smack on the half square here. And the half square on wheat there is around 652. So we closed right at that half square. But provided that we can put in this higher low and then take out this high here, we could be in for worst case scenario in ABC, which I'll draw in so you can see it. And best case scenario, you catch a fast moving third here. This will take us up, break us out of this downtrend, channel we've been in, and take us above the half square if we just do the ABC. But I like the way this low is coming in. As long as we hold and don't, roll over and head straight back down, it does continue to look promisingly bullish for wheat. Anything to add here on wheat, Barrie? I know you wanted it to hold in that area, and it really held right where you wanted it.
Yeah, I mean, the ideal level would have been around that 660 area, 662. And over here, we really need to hold above 640. 641 was that level.
Right in here.
Yep. So if we can hold here, and like right now, I don't have anything super bullish till we can hold that and get above the second level I gave you, that 660.
Right.
664, and then it'd be all right. Let it finish up. I mean, there's plenty of room to go up. So
absolutely, we got to let it finish. Taking out this high will be a very bullish sign for wheat. All right, let's look at beans, which is the best performer in this group right now. And you can see what we've seen here. And if you sort of think of the wheat chart we just looked at, this could be a preview, right? Sharp move up off the low. Here we had the low, false break, half square, really nice, sharp pullback, and then look at that move off of the pullback. We made a higher high, so we took out that high. Now we didn't hold it, so we're pulling back again.
Right.
But if we can put in another higher low here and get a reversal, this thing is building the momentum, and sort of the higher demand levels are coming in that you want to see when something has turned the corner. But I think this is sort of leading the way. I'm not going to cover corn because corn is really trying to put in its low, and I'm going to wait, till we can triangulate that low a little better, and then we can review it and talk about it. But beans is leading the pack right now, and I think it's going to be sort of a preview for what happens, with these other grains. Wheat looks like it's on, closer to this one because we're here, basically here in wheat, the first major pullback off the thrust. We're down here on the wheat chart, and corn is down here trying to put in its low. But I like the way beans is acting. I really want to see it settle above this half square, and the half square there on beans is around, call it 1486. Settling above there would be a really bullish sign that yes, the low is in, and we've got the higher lows, and we've got some fast moves higher coming. Anything to add here on beans?
Yeah, I think the number I had last week was around 14, let's say 1414. And I think any business above that, it's very positive. So I think even this counter trend, we came down 2 days. Let's see if we can, if we can hold that 2 days, it's very bullish for beans. If we can hold 3 days, that'd be fine. But long as we can do all that business about 1414, above that 1414, I think we're in good shape.
Yeah, it looks good. Looks the best of the grains. Let's talk about one we haven't talked about in a while, and that is sugar. Last time we were talking about sugar was in here, right? We were trying to break out of this big sideways pattern, and of course we got it. Now we've had a sharp pullback, and look at where the low came in, Barrie. This trend line was drawn in off of this. And look at where the low came in. Got a nice reaction up off the low, and we have 3 days in a row settling above a half square.
Right.
So there's a really good chance, and look at structurally where this low came in. It's perfect structure.
Yep. All lines up.
Right. So I think we have a low here, which could mean this correction is over, and now we got to see, what are we going to get out of here? So we've got the first thrust up. We're looking to see what the first pullback looks like. Do we get a higher low? And then we could again catch, a third showing of a fast move higher. A couple other things to look at here. Look at the weekly, where the low came in on the weekly. Again, perfect weekly structure. And it tested that full square and, bounced up nicely off that. And then check out the monthly. So we came down, and now we're battling here at this full square on the monthly. As long as we settle above that, this is where the previous highs were in 2016. Which that's not bearish, right? If you're on top of previous highs, that is the definition of a bullish market.
Well, and plus we've come a long way since the low last year. So
yeah. And this is monthly basis. It's not like a 5-minute chart. So this is a significant level, and you can call that on the monthly, it's around 2340, 2335. So closing above that and doing your business above that is really, really bullish on a monthly basis. So sugar's been leading the commodities this year, as you've seen. Look at that rally since March.
Yep.
And I think this is a pullback in an otherwise bullish market on a weekly and monthly basis. So, we're looking to get involved again on this next pullback, provided that, that we get a good setup. Anything to add here on sugar?
Yeah, it's funny that, the low on that trend line, the February low that touched it, well, from that low to the touch in June, it's 90 bars. So
nice.
That's 90, right? 90 to 90 lows. Remember, we looked at
those are significant. Yep.
So the fact that we bounced off of it is no accident. And so that, fact that it came out in that kind of timing is pretty good. So let's see how it manages that. But I think long as we can hold above about 22.5, I think we're in good shape.
Yeah, this is a bullish market.
Mm-hmm.
So we'll see. All right, let's jump to the one that we have to have the patience of Job with, which is cotton. Now, why am I showing you cotton? Because it's basically sideways. Well, last week we talked about we got a third higher low here. This week we pushed up, nicely on Monday. Tuesday was a holiday, and then Wednesday, Thursday, Friday we just sort of chopped around. But again, closed on the high today, right on a Friday, another high close on a Friday, which I love seeing in these commodities, because if someone's willing to pay the top tick for the day at the end of the week and hold on the weekend, it generally means they want to own it. But the reason I wanted to show you this, let's look at the power that's building up and what can happen when this thing really goes. Let's look at the weekly. There's your weekly chart. We're triangulating, but the important thing here is the higher lows that are coming in, right? Mm-hmm. 1, 2, 3. And the fact that we're doing this, most of this action is happening above this full square.
Right.
So we're sort of winding up, creating energy in a bullish manner within this triangle. So when this thing breaks, we're going to see quite the explosion. Now, I'll give you an example on the monthly of what happens when these triangles break. So here's the current monthly triangle we're forming, right? Nice symmetrical triangle in no man's land between the half square and the full square. But look what happens when these triangles break. And this was a 1, 2, 3, 4, about 6-month triangle. Look at that move. You basically got, a square plus out of it. And here we've been in here 1, 2, 3, 4, 5, 6, 7, 8, 9. This is the 10th month in this triangle. So the energy that's building up is tremendous on a bigger time frame. So as long as we on that daily have this bullish consolidation showing higher lows, we know that the energy, once it breaks on a bullish side, can give us a massive, massive move just in looking at the weekly and the daily and the history of that. I know there's not a lot to say about a sideways market, but any insights you want to share on this one?
Well, I think we touched on it last week, being that low that came in was pretty decent, right? Around 77. Well, on your full square. But according to what I'm looking, it would really help to take out 82.
I think your number was 82 and we closed at 81 here today.
81, yeah, we need to if we can get above 82, I think we can run again for at least a short run.
Right.
If nothing else, the upper boundary, right?
Right. Let's go to the energy stocks, energy commodities. Those are the last ones we'll look at. So crude, what do I want to show about crude? Similar to Barrie's chart.
Well, the half square is right there.
The half square. That's right. Look at that push up at the end of on Friday, right into the half square. It looks like it wants to settle above it, doesn't it?
Mm-hmm.
Maybe not today, but it's on a Friday again. If we close up in here on the high of the day going into a weekend, somebody really, really wants to own crude over the weekend.
Yep. And not shy about it.
and not being shy about it. No, because we're up, what are we up? Almost 3% today on crude. So this market, to me, the smaller inner triangle is broken. Now we're looking at the bigger triangle. This thing, I think next week, if we start trading above this, 73 on yours is 73.5, mine's 73.81, which is where we are right now. We start trading above that. I don't think this is going to hold it back anymore. I think we're going to come in and start challenging this upper square. And the upper square here is, let's see, where is that? Around 85, which is not far from I think 83 or 84 is your top number there, right?
Yep, 83. Yeah.
Yeah. So I think that's where we go once we settle above here. So watch crude, be ready to go on crude because it looks like it's ready to move. All right, let's talk about nat gas, since we've had a lot of people interested in this one.
Mm-hmm.
I drew this little ABC in because when I was down looking at like the 4 hour and the lower time frames, it's kind of doing this right now.
Right.
So we've had this initial push up. We kind of stalled correctly. We're stalling at this full square, in the 282 area, even got stuck below it. So we want to see on this pullback, do we do an ABCD? Do we hold this trend line? Do we get another higher low? And again, the longer it does this sort of base, the more power the next move's going to be. The other interesting thing is that this steep trend line from the highs we saw, back in 2022 is getting closer and closer. It was up. We were talking about, we're going to probably run up and test it when we hit the full square. Now it's getting in the neighborhood of the half square here,
right?
Around 340. So breaking through that is going to be less difficult the lower it is, because we'll have, if we come up and we get above this full square, we'll have the power of that square pushing us higher. So I'm still very bullish on that gas. Yes, it's frustrating. If you've got options that are expiring anytime in here, you're dead. But the commodity itself is forming this bottom that I think is going to be, a platform to push a lot higher in nat gas. Any comments this week on the action in nat gas, Barrie?
Well, for now, we wait. This is the pullback continuing. And overall, we're still okay, but I would like to see 265 taken out to the upside, because that's probably when momentum's going to shift at this point. Otherwise, anything going all the way down to 230, 232, I think we're still in really good shape as far as the bottom goes. The move out of here, I think 265, we need to hold above that, which we couldn't quite do. So it's probably still basing and trying to establish those positions. So
yeah, I think that's a good summary, because remember, the 267 we talked about last week was on a weekly basis. We wanted to close over that. We got to close over it this week. It looks like we're going to close under it, unless they make a 10-cent move.
Yeah, the thing to remember is, as long as we're above 230, it can meander and do whatever it needs to do. So allow it to do that. If it gets below 233, then we have something else going on. So we have to wait and let that play out. But in the meantime, is really 233 to 265 is sort of the box, let's say. And obviously, so on top of the box would be above 265, and that would be positive. And if we do that, we can probably go check out 310 without much of a problem on this run.
Sure. That's it for the commodities, Barrie. What I wanted to talk about this week with the little shop talk is, when we get these periods where a lot of markets are basing or consolidating or correcting, what is it that you focus on? I know you and I always talk about, okay, we got to get the levels where the breakouts are going to be, whether up or down, and know those, because if you're trying to figure it out when the market's moving, it's too late. You're going to miss it. So what do you spend a lot of your time on when there's nothing to trade, but the markets are in a consolidation or correction phase?
Well, I can only answer that, by using the tools that we have as a lens, let's say, just to make it easier. So constantly, all I'm doing is looking at the time cycles. So if something's going sideways, well, fine. That's why squares really come in handy, because you can put it on different swings, and you can kind of figure out what the cycles that are running. So you wait for those cycles to expire and for the market to sort of, give you some kind of a hint. And so sideways, all I do is watch the levels and watch the time cycles, because you can have markets come into a time cycle. Well, we looked at a couple today, right? Like can you pass me the thing real quick?
Yeah. Let me send it over to you.
You can look at, what is it that well, here's a good classic one. Let's look at crude. Right?
Perfect, right?
Perfect. Here's a whole bunch of sideways. What do we do? Well, here's exactly what we do, and I think we kind of both do this. But To be precise, I'm looking at these time counts. Now, this is square 45, so it's every 45 days, you guys. So it's not like it's every other day you're looking for something,
Right.
right?
Right.
So you only get a few shots at this, and in a year. So looking like coming down, for example, let's just say if it starts to consolidate here, let's look at where the first start to consolidate. So we made a
Mhm.
high, came down, we triangulated. So this is kind of a consolidation, right?
Yep.
And I remember we were still bullish because we held this 97 area, right? You can look
That
here.
was the line for a long time, that
Yeah, forever,
97.
right? So there's
Right.
97. We were basically holding above it. So long as we're holding and we started to make the higher lows, well, we were still bullish, went up right up into this high and we squared there. That was 45
Right.
from this low to that high.
Yep.
So, okay, so far everything's moving. All right, great. So 45 there. We started to move lower off of that. And soon as we broke the full square and we broke the half square, not exactly sideways, we're consolidating and down move. We're continuing to make lower lows and lower highs. All right, here we could say as soon as the lower lows, lower high stops. Remember, we talked about this a couple of videos ago. How do we know when it's not trending? Well, it's not making lower lows and lower highs, right?
Mm-hmm.
Pretty basic. So right in here, it stopped making lower lows and lower highs. So right in here, we go into look, well, what time do we have to work with? Well, we had a 90 here, 135 there. And the idea there was, let's see if the market will stop there. And I remember looking at a couple of other things at this time. So you want to look at from the next higher low that we just talked about that today.
Mm-hmm.
You come into here, it's 90, right? So that's the potential time for things to change. And what are we changing? We're changing from the sideways we just identified here to something else. So as soon as we took out these lows at 90 and rallied and failed, now we're back in the downtrend, right? So this is still not chop sideways. We can still trade to the downside. And we found from here that was 90 degrees down, right?
Mm-hmm.
So that was support. Then we pause again, let it rally again. Fine. It's in a downtrend. Now we have trend lines and other levels coming up in here. We had 91 over here. So I think anytime we can't hold above it, that's weak. So long as we're kind of moving in some direction, making lower lows, lower highs. So here, there's another consolidation happening. What are we looking for? We're looking for a break here at 90. We broke through. And after we broke, it was right to the 50%. Here's a counter trend, failed again. Long as it's moving, right? Let's just make it very concise and say, long as we're making higher lows and lower highs, we're going down. Long as we're making higher highs and higher lows, we're moving higher. As soon as that gets sort of stalled out, then we jump into the mode of consolidation. So finally, we get to the consolidation we've been really watching, because all of this, it was consolidating here, but they were all short term, and then it would move back down again. So coming down, we came into a cycle, good square, right here in December. And after that, we just couldn't move. As soon as that low came in, this high came in, that low, and right here, we couldn't really get above. Well, we're in consolidation. That's as soon as
that started the chop fest right there.
Yeah. So that as soon as we start that, at least here, it wasn't so terrible because we had the upper boundary, 83, we had 73, and we had 65 down here. So we were still able to trade off of that. But just in general, when it starts to go sideways, you just wait for the times to expire, right? And you just wait. And then why was that big deal in March? Well, we had 270 bars by 135. So I remember when that came in, we're like, that's a pretty good low. Let's look to trade the other direction. And then we could get, after that first pullback stalled right there, we were on board, right? That worked out really well all the way to 83. So what I do is, if it's going sideways, you wait for some kind of a break and some kind of a cycle to expire. So in this case, it was that low. So that's how it works. Then it ran up, then we came back down here. All through here, we didn't have anything to do because we know that cycle expired. So there's not much to do till that gets taken out, right? Either
Mhm.
this low or that high gets taken out. Otherwise, we're just consolidating. So you just mark out time. That's the best we can do.
Yeah, and using those 90s and 45s and 180s can help you, and 144s can really help you sort of get an idea of what might happen in that time frame, right? That if something happens in that time frame, you can say, ah, that's significant. We
Right.
don't know for sure that it's going to happen, but being aware that that's what you're coming up on, like you can see on Barry's chart there, that 90 he has, he knew something could significant be happening there around that 90.
Mm-hmm.
And then you let the market tell you from there. Price will tell you, how it acts at that time in relation to support and resistance as defined by the squares.
Well, and you can do a similar thing with indicators. You can have an indicator, kind of map it out. This is really mapping, right? What we're doing is mapping. We have a grid, and this is sort of like the path, the flight, or the path that is taking, and you're just mapping it out. And just by using geometry and the way how geometry works with sentiment, I suppose, there are a lot of patterns that get revealed, and we're just mapping those patterns. And by looking at that, I didn't even move the square. Normally, I'm looking from a couple of different angles just to triangulate what's happening, just like as if it was flying.
Mm-hmm.
And it is. So you just wait, you look at these levels, you look for time cycles, and we looked at, that's what we did here, coming up into this zone. We had a 540, we had 450 over here, 315. A whole,
Mm-hmm.
108, 144 right here. So
Mm-hmm.
I'm always marking time. And if something is consolidating, you're still marking time. And it's even more important to mark time.
Right.
Right. And now
Because you
here,
want to have ideas of the windows where it might end.
well, what I remember, I was just going to say, if you don't do that and you rely on news and hearsay, what happened here was, I remember when this broke, it got really negative all of a sudden. Right.
Mm-hmm.
And whoever got short on that day or the inside day, like this is normally very bearish when you have a big down day at an inside day,
Right.
especially the next day it takes out that low. The
Right.
shorts got in right there. There's no question, right? And what do they do on the day of the low? They push it down exactly to our level. It was pretty much to the day lined up with
Timing wise. Yep.
the timing, and they reversed it and went on to just slaughter all the bears. So not having the cycles, knowing when these highs and low the probabilities of them coming in, you're definitely at a disadvantage. It's I couldn't trade without them because you don't know where things are.
You
So I
want
would
those
say,
windows, right? You want the windows of possibilities.
yeah, and from significant highs and lows, like these two, either one of these would work because it's a harmonic of the 45, because it's a half square here, right?
Mm-hmm.
But like that, so basically consolidation time is to work up your charts, look at it from a couple of different angles and draw your lines, draw your boxes. And that's what we're doing. Like if you look at half of these charts, I have boxes and lines everywhere because that's just to remind me, just like when we saw in the zero, right? This
Mm-hmm.
box here it was from a couple of different points where the squares line up. So once you know that zone, it's a lot easier to work with. Well, here's another good, speaking of consolidation, look at this, right? So here's the 30-minute chart that I post on Twitter. So I mark out these zones. If you can see this green zone here, we were looking for it to be sort of a choppy area, grinding, and we got that. Broke the 50% square. So all through here, we're not trying to sell it just because it's under it, right? And we're not trying to buy it. We're waiting for it to clear. Right here, it started clearing. We had a triangle break, and boom, ran right up to the next level. And all through here, right, Ben? This was just right here.
Classic. Yep.
Yeah, we weren't in there trying to buy it. Just,
Nope.
when everybody else probably was, because, we just went into new highs and everything's kind of looking good. But we knew better. So we're watching, marking off time. And here we had a 50% in time and price square. And as soon as we hit that like a wall, right, you can see how quickly it just stalled right off into another level, back on up. So
Man, look at him dumping this thing into the close.
Yeah. And look at that, right?
Right.
And it's funny that 44.60 was the key level we had to hold above. We were going to run up higher, but
Yep.
we just
Couldn't do it.
Must have been some good news.
Anyway, now that's great
Yeah.
stuff, Barry. Thank you
But you get the idea,
for
right?
going
Is
over
that
that.
clear enough
Yeah,
to, yeah.
absolutely. Because it's what you do during those periods when there are consolidation. That's when you do the analytical work. So you're
Right.
prepared for when the market does decide to move, right?
Right.
You're not going, what happened? You're going, aha, that's what's happening.
Yeah. And mark out all kinds. I mean, if you don't use squares, at least look at the patterns that tell you evidence of a lower high, right? And evidence of when the pattern is finishing up, when it's ending, and what does it look like when a pattern finishes? It's going to have to break out this way or that way. So long as you have all those markers there, you can just continue to ride it.
Yep. So this week, Barry, I'm going to be focusing on sugar, cotton, crude, and nat gas. Those are the four commodities that I'm really going to be watching closely because I think they're in a position where things could happen. How about you? Where are you going to be looking?
Well, it'll be the S&P
Mm-hmm.
and bonds. See what we
Mm-hmm.
do here at the double bottom kind of an area, right?
Right.
And I'm watching some of the grains to see how it's going to pan out because those things can move in like 1 hour. So have to really kind of keep an eye on that. And of course, crude. So crude, I would say crude bonds and the S&P like would be the main thing.
Excellent. Well, great show, Barry. Thanks for all your work here. Everybody, listen, have a good weekend. Rest up for the next week, and let's see if we can have a great week and get some of these commodities and markets moving so we can trade away.
All right. Thanks, Ben. Good coverage. And everybody have a good week. And don't forget to, I should say, remember to click the likes and shares and subscribe.
Excellent. Take care, everybody.
Bye-bye.
Bye.